On February 19th, major news circulated across social media platforms, newspapers, and television.
Drivers KRA tax fight against tax cheats to informal sector. The Kenya Revenue Authority is hunting down barbers, high-end beauty parlors, and taxi drivers as it eyes a share of the billions of shillings changing hands in the informal sector, which has for long eluded taxman's dragnet.
About the Kenya Revenue Authority implementing a 16% value-added tax on high-end barbershops, spas, and beauty parlors. Additionally, a 5% levy was imposed on commissions received by service providers within the industry. This transformative policy took effect after following the passage of the Finance Bill 2023. While some shop owners have started paying these fees, others are shocked and uncertain about how to proceed. Hello everyone, I am Travantine, founder of Barberpreneurship. I initiated this effort to help those who need guidance to understand and comply with these new taxes. I have taken time to thoroughly research and consult experts on this topic. Make sure you watch till the end and have a pen and a notebook ready for some important takeaways. Since the Finance Bill 2023 was signed into law by the President of Kenya, we are going to look on how these changes has affected us in the beauty industry. The increased VAT on petroleum products. First up, the VAT on petroleum products has doubled from 8 to 16%. Higher fuel costs mean higher transportation expenses for goods and services. If you run a beauty business, expect to see increased costs for getting products to your shop. Independent service providers will also feel the pinch when purchasing products and equipment. Essentially, everyone in the beauty industry will face higher operational costs. Introduction of new tax bands. Bill introduces new tax bands affecting personal income tax rates. These changes means that those in higher income brackets will pay more, while lower and middle income earners might see minor changes. As a service provider, whether you work under a contract or own a shop, you will need to be aware of these changes when filing your taxes. Taxes for service providers. If you work for someone under an agreement or contract, the Kenya Revenue Authority expects you to file your returns from your salary or commissions as income tax. It's essential to stay compliant to avoid any penalties. Taxes for independent service providers and shop owners. For those who are independent service providers or shop owners, here are the key taxes to be aware of. Number 1, income tax. Everyone must file their personal income tax returns. Number 2, VAT. Previously, only businesses with an annual turnover exceeding Kenya shillings 5 million had to register for VAT. Now, both registered and non-registered businesses must charge the standard VAT rate of 16%. This means you need to charge VAT on your services and remit it to the KRA monthly or quarterly. Number 3, withholding tax. This includes different type of withholding tax you need to pay on behalf of your staff or for your business. On behalf of your staff, if you pay your staff a salary, you must withhold a pay as you earn fee and pay it to KRA. If staff are paid by commission, you should withhold 5% of their commission and remit it to KRA for the business. If your beauty business pays rent, you must withhold tax on the rental payments. The rate for rent paid to residents is 10%. 15%. If you take loans and pay interest, withholding tax applies on the interest payments. The rates for interest paid to residents is 15%. Make sure to stay updated and compliant with these new regulations to keep your business running smooth. If you have any questions or need further clarification, drop them in the comments below. In every industry, there are always disruptors. They come in form of invention of new technologies or introduction of new policies. In our case, the introduction of Etims has and will change the way business is carried out in this industry. Stick around till the end and get to know more about Etims. Another reason to make sure you are subscribed to this channel is because we help you grow and reach your full potential. Hit the subscribe button if you have not yet subscribed and turn on notification to be notified once we upload new content.
Do you know Etims?
It's just that electronic tax invoice management system. Now, basically, it's a step above what we've been doing as taxpayers. For your tax liability, anytime you need to support your tax liability, you have to have the records of transaction. For example, your sales records, you need your purchase records to be able to say, really, when I say my liability is 30,000 shillings, it's because I have these purchases, I have these sales, and that's why I was able to determine how much my tax liability is.
So what is Etims? Generally, Etims stands for Electronic Tax Invoice Management System. It is a system used by the Kenya Revenue Authority that helps businesses issue electronic invoices and simplifies tax compliance. Etims allows you to generate and send invoices to customers electronically, with the details automatically transmitted to the KRA. How to get started with Etims? You should visit the KRA website. I will leave a link in the description to get you there. Then, once you are there, you should choose a solution according to your business size and needs. There are various solutions, online portals, USSD options for non-VAT registered businesses. Also, there are downloadable softwares that you can integrate with your software. Download and install the software that you need, and from that point, you can start and issuing invoices to your customers. There are consequences of avoiding Etims. The Kenya government mandates Etims usage. Businesses that fails to comply may face fines. Without Etims, you might not be able to claim business expenses deductions on your tax return. If you don't issue Etims invoices, your customers may not be able to claim input tax on their purchases from you. Benefits of Etims to the business. Etims streamlines tax reporting and reduces paperwork. There is no need for expensive physical invoicing systems, thus reduced cost. Etims also helps to maintain records for your invoices. Etims makes it easier to claim tax refunds with proper Etims documentation. So, the Finance Bill 2024 is a hot topic right now, and it's clear many Kenyans, including myself, and major companies have.
And Kenya's leading telco, Safaricom, Amnesty International, and Kenya Women Parliamentary Association are among entities that have rejected the Finance Bill 2024, warning that its implementation will have a negative impact on the economy. The entities further cautioned against increased taxation on essential goods and services, stating that it will increase the general cost of living and drive the country into an economic crisis. Set to follow the Finance Bill 2024 public participation proceedings.
Concerns. While some aspects of the bill might be positive, the potential 2 million shilling fine for not adopting the Etims system seem unrealistic and a major sticking point. Will this bill truly boost revenue, or will it kill Kenyan businesses? Only time will tell.